Hey, it's Clay, and this will be a video chart on ticker symbol FCX. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So this here may look like several days worth of time. It's actually today's price action broken down into 30-minute time slices. I like to this time frame does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. Pretty rough day today. Things started off very, very nicely. Price absolutely exploded upwards and then gave all those gains back. And now the chart is starting to sit at some pretty interesting territories. And, the main level to watch going forward, in my opinion at least, is down here at $8.72. Why is $8.72 important? Well, I'm not saying this is what's going to occur, but if the price were to just continue to pull back and come down to $8.72 and then just continue on down, what would that be doing to the price at that point in time? Well, from a very literal perspective, that would be putting the price right back inside of that range of the chart where it was back here a few days ago when it was flirting with those lows. And not to insult your intelligence, but price movements that go back to where they were, not exactly a sign of true strength or true power or anything like that. Whereas on the flip side of things, if the price came down here, still not the greatest thing to see, but if it behaved in that manner, then started to work its way back upwards, now what would you have? Well, at least in this situation, you'd have a set of lows here, you'd have those lows there, and you'd have those lows down there. So you'd have a big base of lows right here, and that would be previous or higher than the previous low. So if you envision these as stair steps, well, you would still have progress being made in the upwards direction. So 872, definitely a very important level because it's basically telling you, well, is the price actually making progress or is the price going back to where it was? And once more, prices that go back, not a good sign from the bullish point of view. Now, on the flip side of things, let's talk about some areas of resistance. First main level of resistance in the very near term is going to be that purple line right there, the 50-period simple moving average. You can see that once the price fell below it right there. Try to get up above it and couldn't quite do it. So in the very near term, like I said, 50-period moving average is going to be that initial level. And the next key level of resistance after that, if there is any sort of attempted bounce back to the upside, going to be right up there around $8.95. So all in all, a pretty rough day, a pretty disappointing day, especially when you factor in, how, like I said, it started off so strong. But the week is young, still 4 days left, so we'll see if the bulls can try to turn this thing around or not. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.